All right, let's talk market. Let's talk the March market. Now, I know it's toward the end of April. I'm a little behind on videos and I want to examine the March market. We'll do another video on April market once we're through that. And I'd seen this article that I found really interesting saying that the March market nationally, we actually had seen less sales. And so much so that this was the worst March since like March 2009. Right? So I thought that was really, really interesting. I thought, well, I need to do some digging and looking at the numbers here. We've actually been pretty busy. It took me a minute to get all the numbers put together and take a look at them. I found some interesting side notes. Yes, this March was low compared to last March. And good news, the market's still strong. Let's dive in. So at the time of this video, there are 792 active listings on the market. There are currently 410 under contract. Now, I did pull these numbers like a couple hours ago, so if you're like time stamping me and checking this, could be off by a couple. But 410 under contract is fantastic for our market. So a couple of things I want to talk about right off the bat. The absorption rate, what is the absorption rate? The absorption rate is a measurement of the market taking active listings against what's currently going under contract or the current rate of under contract. So what that means is if we have 10 properties on the market and 5 go under contract every month, then if no other properties came on the market, we would have an absorption rate of 2, 10 divided by 5, meaning that within 2 months, we would be out of properties to sell. So there's your definition. We are currently sitting at 2.94 month absorption rate. Now here's the interesting thing, that has been ticking up since probably 2020. It's been going up and down. I did another video about this, but it just overall has been continually slowly rising. We've just crossed the 3-month absorption rate when you look at year to date. Again, 2.94 just for the month of March as opposed to last March. So we've seen that continue to creep up. All that means, it was a long way of saying we've got about 3 months worth of inventory. Now, price. Here's a really few interesting things that I was like, oh, this is really incredible, at least to me, because I'm a nerd and I like the numbers. The average list price has actually dropped 12% from this time last year. So an average list price of about $296,000. The average sale price, however, is much lower than that at $205,898. And that's down from last March. That's down almost 6% from last March when it was a little over $218,000. Interesting again though, and I'm going to keep using, I'm probably overusing the word interesting. The average price point for the year to date is actually only 0.25% above last year. So $218,581 for the year so far, January through March. What does this mean? It means our market is actually still pretty steady. We may have seen a drop in March. We're going to talk about some closed numbers that are not what we'd like to see them. We'd like to see increasing. And yet the market seems to be fairly steady, and prices, at least as we're seeing year to date, are not dropping. Again, March to March, yes, we saw that drop, but we're not seeing that drop across the market over the year. Now let's dive in a little bit more. Median sales price this March was $193,750. What this means, when the average is 205 and the median is 193, that there are a lot more properties that are actually selling underneath the average. That's why the median is lower. And there's a few properties, maybe we'll call them some outliers, there's the higher priced ones, they're dragging the average up. So despite the fact that the average price is 205, there are actually more properties selling closer to the 193 or underneath 200,000 in our market. The average days on market has continued to tick up. We've seen it cross finally 90 days. We're at 92 days average. Now, again, another thing, the median is actually lower. The median is at 65 days. Now, when we figure for the time on market, and real quick, time out, let's go backward. Average time on market, what is that encapsulating? Well, that's actually from the time that a property goes on the market to the time it closes. So it includes all the time it was on the market before it got an offer, then the escrow period, the inspections, the appraisals, everything there, everything it encapsulates all of it, right? From the time it hits the market to the time it actually is sold and closed on, right? So 92 days from the time they put the sign in the yard to the time their moving truck leaves for the last time. Now the median, again, I said was 65 days. Now when we look at our average time on in escrow can be 30 to 45 days. Now let's just go with a 45-day timeline. This means that the median days on market was 65. These people have their home on the market for about 20 days before they go under contract. This is why, despite prices coming down in March and actually remaining steady for the year, despite days on market on average going up, you may still feel like it's a crazy market. We're actually dealing with several multiple offer situations. because the median price or the median days on market is actually only 65, meaning these people within a couple weeks have received all the offers, they've accepted an offer and moved forward. This is really just saying we're in a great market, folks. It's still a great market. I know interest rates are 6.8, but there's still business being done. There's still buyers buying homes and sellers selling. Call me if you have questions, right? 417-439-7721. Let's get back at it. Now I want to make sure I don't take too long. I can see the time. I'm already going crazy, but I'm nerding out here. So let's go into the sold listings. What has actually sold in the month of March? So according to the data, we had 230 homes sell in the month of March. Now that actually is down 7.3% from last March when we sold 248 homes. Looking into the data a little harder, I did notice that the largest, where the most properties were selling was between $120,000 and $400,000. We typically break down the prices between like $20,000 increments and $50,000 increments. So again, where you see the most properties having sold in March, 120 to 400. Where you saw the highest concentration in that was $200,000 to $250,000 homes. It's the highest concentration of homes with 47 being sold in March. Now, interesting to note, that's actually only down 2%. One property, right? One property sold, one property less in March 2025 to March 2024 sold in that $200,000 to $250,000 price point. Meaning, again, we're still in a good market. Despite the fact you're seeing like maybe the numbers as a whole, like 7% down, I talked about that. In the price points that are moving quickly, you're seeing actually quite a few homes sell. Now let's move on to the good news. Pending listings, listings under contract. This is actually seeing a slight increase. Now I did say slight, right? 2.9%, 3%. We have currently in March, we had 287 properties penned. Now, that is a little higher than last year when it was 279. Once again, I looked at where the highest concentration was, and you would once again see 120,000 to actually 500 plus. We've seen higher and higher priced properties in our market go under contract. In fact, where the greatest concentration of new under contracts in March was 400 to 500,000. This is great news for our market. Meaning, again, the market is continuing to climb. Now, real quick note, I went back and said, what about the year to date? The year to date, 35% increase in $160,000 to $180,000 properties going under contract. So again, year to date, I would say, hey, if you're selling a home, you're in that $160,000 to really we could call it $250,000 price point. Those markets are continuing to move. We just talked about it on the sold, seeing it on the under contract. Let's move to active listings. I'm going to wrap this up for you. Active listings, we are seeing a continued rise in active listings, more and more inventory. So for March, we had 760 active listings. That was an increase of almost 13%, with the highest concentration of increase being in the $160,000 to $180,000 price point, with 117% increase in that price point. The market's still great. New listings hitting the market. We're going to end with this. New listings hitting the market are actually up 5.3%. There are more and more people starting to decide to sell, despite the fact that they had that low interest rate and interest rates are higher, right? That's the excuse we always hear. Oh my goodness, this is why it's so tough. Despite that, more and more people are deciding to hit the market, with 400 new properties hitting the market in March. Again, the highest concentration was in the $400,000 to $500,000 price points, with an increase of 93% from this time last year. And then year to date, where are we seeing that huge, that largest increase? The largest increase was in the $300,000 to $400,000 price point, with a 28% increase over last year, year to date. So what does all this mean? It means it's a fantastic market. And I truly mean that. We're in a great market. Interest rates are going up and down. I think at the time of this video, I saw about 6.82. I'd done a video last week and it was 6.89. So we're seeing those interest rates go up and down, up and down. And our market in the Joplin, Carthage, Junction, Southwest Missouri area is continuing to do well and maintain, if not just a little bit, tick up. So until next time, I'll be doing a video for April's numbers. It's about to come out. We're toward the end of April now. So in the next couple of weeks, we should be able to do a video on April's numbers. If you have any questions about the market, please hit me up. My number is 417-439-7721. Text me.